the Chinese economy, which is showing signs of cooling. Beijing has reported weaker than expected GDP numbers for the first quarter of 2012 today, and with growth hitting its slowest pace in nearly 3 years in the first 3 months of 2012, investors are clearly concerned. The GDP growth in the first quarter slowed to 8.1% from 8.9% in the last quarter of 2011. Now, the numbers were broadly in line with the conservative expectations of investors, who have expressed growing concern in recent weeks that the bottom of China's economic cycle would extend into the second quarter of the year. China's economy is struggling to escape its worst sequential slowdown since the 2008 and 2009 global financial crisis, when the government was forced to pump nearly 4 trillion yuan into the economy by way of various fiscal stimulus measures. Arnold Gay at Reuters has this report on China.
The poorer than expected GDP number extends China's slide into a fifth quarter and raises fears the economy has not bottomed. China's Q1 growth slowed to 8.1%, the weakest in nearly 3 years. National Bureau of Statistics spokesman Shen Lai-yun says the slowdown is largely the result of deliberate policy adjustments.
China's rate of economic growth fell partly due to changes in the domestic and international economic situation that resulted in a slowdown in the growth of demand. But in fact, to a major extent, it was the result of the Chinese government's voluntary adjustment.
Growth of 8% is widely regarded as the threshold at which China struggles to create enough jobs for new entrants to its 800 million strong workforce. But with Beijing cutting its official full-year growth forecast to 7.5%, there is a growing view that China's threshold of what might constitute a hard landing has moved significantly lower. This means Beijing may not necessarily react to a fall in growth rates below 8%. On Thursday, the World Bank lowered its 2012 growth forecast for China, with lead China economist Otto Hansen citing several factors.
Domestically, we see the tightening of policy impacted primarily on investment. Both the withdrawal of the big stimulus package and the investment into areas like the property sector started to slow down. But in contrast, the bright spot in the economy has been consumption, which has remained strong as employment has been high, as consumer confidence has been sustained, and as real wages have grown strongly.
The World Bank cut its China growth forecast to 8.2% from 8.4%, but raised its 2013 forecast to 8.6%. The global lender expects a rebound in the Chinese economy from the middle of the year.